I was looking at YouTube, which I often do to look at some of the data, and wow, has the amount of market correction videos on YouTube starting to really pop up again. So it got me thinking, I got this new report from Zillow we're going to go over about the market deceleration. Is 2025 going to be finally the year that real estate market prices bomb? Hey everyone, this is Rayce Robinson, your favorite Florida mortgage broker, and we are going to look at this article or this update from Zillow on the market deceleration, what they're saying in the housing market, and also nationally, what are the big dogs saying as far as what's likely to happen to the real estate market in 2025. And the reason you're seeing a lot more of these predictions and updates is because the market has softened. We obviously went from a few thousand homes in Central Florida up to over 11,000, right? Almost 5 or 6 months of inventory, depending on the month. And at the same time, the Fed, let's just say the market pricing in less rate cuts to the Fed funds rate by Jerome Powell and the Fed, meaning that if rates stay higher for longer, look, if rates are 10%, way less people are going to buy. And if rates are 3%, way more people are going to buy. And now we were predicting rates to, there was a time where almost everyone I was reading was predicting rates to be closer to the mid to lower fives. I was thinking that based on the data. And now when you look at it, there's even a split at the upcoming meeting if people even think the Fed is going to cut a quarter or so at the next meeting. So we shall see. But obviously, if rates stay higher, that means the market is going to stay softer for longer. As payments fall, more people get in the market. And that is bringing on all this speculation. Will we finally see a big market correction? So let's look and see what are the big dogs predicting. And so this is national home price growth is decelerating. Just look at this chart. And before we look at the chart, they're talking about this year over year shift. So for much of 2024, we've seen a slow deceleration in year over year rate of change for national home prices. So Case Shiller was saying that they expected there to be 6.2% in appreciation. They've dropped that to 4.3%, right? The FHFA 6.7 to 4.2, Freddie Mac from 6.7 to 3.6, and then Zillow from 3.6 to 2.4. Just meaning that even though no one's predicting a major price correction at this point, the appreciation or the amount of appreciation that they are predicting continues to go down, right? And remember, data data changes everything. So we were predicting much lower rates, now we're not. I like this chart here because it really shows just how the market can move. So this is obviously 2005 where prices really ran up. And then as this goes down, so for instance, right here, this does not mean necessarily prices were going down. They started to go down in 2008. This is the rate of appreciation. So we finally crossed over in the really middle or so, beginning of 2007. I think February of 2007 is kind of considered the start. And then we had this rapid depreciation for all of 2008 and into 9 and kind of even into 10. So you can see, and actually this says here into 2012. Now every market was different, and I was a lender during this time. I was buying houses during this time, and it was a very, very rough time with unemployment and a lot of the data. And you can see obviously then we eventually shot back up. So then we had this huge run up here, and just like we normally have a market correction when you have these big run ups, we did. And we had rates all the way to 8%. Now, this is back to this prediction. You can see kind of hovering over different. This is Zillow, and these are different indices that are predicting different things. But they're all from 2.4 to 4.3% going forward, meaning that the amount of depreciation they're predicting is going down. So what do they say? They say, what's going on? After a brief correction in national home prices during the second half of 2022, mostly in Western housing markets amid the mortgage rate shock, meaning rates went up to close to 8% in early 2023. The stabilization occurred in an environment where active inventory remained tight, meaning we had that lock-in effect of people that had really low rates that just were not selling far below pre-pandemic levels. Noted here in Florida, we're actually now above pre-pandemic levels. Fast forward to 2024, and Sunbelt housing markets in particular, that's us, had begun to soften again. Strained housing affordability and slow migration, meaning less people are coming to Florida because it has gotten less affordable. And I'm sure we're going to see this. Hurricanes and storms are going to affect that. Now, well, Florida will always be one of the top areas that people will tend to migrate, but that has slowed and has suppressed housing demand. The reduced housing demand combined with competition from home builders who where and when needed, used affordability adjustments like buy downs to maintain sales has caused active inventory in the resale market to rise year over year, especially in the Sunbelt markets. Will this deceleration soon bottom out, or could we actually see some year over year national home price declines again? The key factor that we watch active inventory and months of supply through early 2025. This just makes sense, right? Is if rates are higher and there's less migration, there's going to be less demand, and could we see a price correction? And the answer is absolutely yes. The challenge is, I think people are expecting a price correction like 2008. If prices were to, they're going to seasonally adjust anyways, but if prices go down 3%, that's not going to make a noticeable difference in the people that are looking to buy. And the opportunity that I think people will miss, because I think in 2025, we do bottom out. We get under 4 million transactions if rates stay higher for longer. And then in 2006, 7, 8, I believe those rates, especially as we get near the end of 2025, will start going down. And that is just going to do what it always does. Rates go down, pushes more people into the market, stabilizes or increases appreciation. So we will see. We're going to track the data, and that's exactly what they're saying. Do I think the market will be softer in 2025? Yes. Do I think there's opportunity for real estate agents and buyers? Absolutely, because if we have 4 million transactions, that's still a ton of people buying and selling. And buyers, even though it's not a complete buyer's market, as you know, if you're a real estate agent, there are sellers that are having to pay closing costs and do buy downs and do these things. And you can get sellers to buy rates down, give people a lower payment until actual rates come down some, and then refinance. No one knows for sure what will happen, but that's what's likely. Now, Zillow gave this updated map that kind of shows all these areas and kind of what they're predicting. Blue meaning appreciation, red meaning depreciation. And you can see is some red on the map if I kind of zoom out here, that there are places where there are red. But you can see in general, they're predicting modest appreciation everywhere. And if we kind of really zoom into Florida here, they don't have every market, but here where we're at in Central Florida, they're saying 2.2%. But look at Miami, they're predicting 3.8%, so double. So again, where you live matters. Every real estate market is local. I guess the point of this video for me is I was at a big event the other day, and I heard a couple real estate agents and buyers saying, wow, prices have really started to come down. And I think the confusion is there are more price drops that there are because sellers can't get any price that they want, and they're getting forced into making their house nice, pricing it with a strategy. Good agents, the difference between working with a good agent and an average agent is good agents have a pricing strategy. They know where you need to be. And they also know the longer houses sit on the market, the lower you're going to get. You're better off pricing it right up front. But look, we're all the same. If you're selling your house, we tend to want to price it a little higher to see what the market will bear. And often that ends up costing us money instead of gaining. But you are seeing more price drops, but the numbers do not bear out. At this point, you are not seeing, other than a few areas, any type of major price depreciation. Now, as far as rates go, because that is what's going to dictate what happens in the market, you can see that we are still coming off this bottom, shooting up, still hanging out back over 7%. And with the Fed meeting about a month away, you can see this is completely split on what's likely to happen. Almost 50-50 at the Fed will cut. So it's really interesting to see that right now this market is decelerating, right? We're in a slower time of the year. And as we get into the selling time, spring, and summer, to see what happens, see where rates are at. Just like the data changed quickly to pull rates lower, higher, we could get a bunch of data because I think the unemployment data is softer than what people think. And if you see unemployment go up, especially when you strip out government jobs, and if you see GDP start to decelerate, you're going to see the Fed cut rates faster. I don't know. Being in the real estate business, I kind of hope for that. But I also understand we don't want really low rates because it just drives prices up. So anyways, that's kind of what the data says for now. We are going to look at the Fed meeting coming up here and start seeing if the market changes their prediction on what they're pricing in. Right now, it's almost 50-50 what the Fed will do. And if there is a rate cut, it's not going to affect interest rates. It's going to be more about what they say in the meeting after about their predictions for 2025. So as more information becomes available, as always, I'm going to cover it right here. This is Rayce Robinson, your favorite Florida mortgage broker. If there's anything I can do to help, call me personally. I'd be honored to do so. Have a great day, great week, and I'll talk to you soon.